Hello everybody, thank you so much for joining me in this video called Car Buying in 2025, Lease, Loan or Wait. And before I start, I want to read my disclosure. The opinions I express in this video are personal and I do not represent any other organization. This content is only with educational purposes and it doesn't mean it is a financial advice. Now, saying this, let's start. I would like to welcome everybody again. Thank you for joining us one more time. And let's talk about the car market, as it is always changing, and right now there are some new important trends and things to consider, like rising loan rates, new electric vehicles incentives, and what's happening with used cars. This presentation will help you understand your main options, like should you lease a car or take out a loan to buy a new one, or is it better to wait a little longer? Well, let's figure it out. Today we will cover the essential topics for buying a car in 2025. First, we will look at the current auto market, discussing how rising interest rates, new electrical vehicles incentives, and changing used car prices are affecting buyers. Next, we will dive into financing options, exploring both auto loans and leasing and what they mean for the wallet. We will then highlight the exciting electric vehicle incentives and all the tax credits that are available for this option. And I will just show you how this can save you money on an electric vehicle. After that, we will just examine the used car market to see if it's a good opportunity or a trap. In this section on the auto loan rates, we will discuss how rates have changed and what it means for car buyers. Usually nowadays, from 2025 and what is happened for this last month of 2026, current auto loan rates are around 7%, which significantly increases the highest in the near to a decade. Now, of course, it depends if this car is new, used, if you're buying it in the United States, or maybe if you are one of the military families that lives overseas and you have to go and buy a car in another country, but plan to get a loan with an American bank. The fun fact is that in the United States, the average monthly payment for a new car is now about or over $100. For the same reason, people are taking longer loans, like 72 or 84 months, to lower the monthly payments. But this can actually cost more in the total interest, as we can see here in the picture. For many buyers with good credit, rates around 7% are common, but for buyers with weaker credit, rates can be significantly higher. Also, it depends if you're going to use your car as a collateral, and then you're going to submit the title to the lender in order to satisfy the loan. Sometimes people don't do it, or they don't do it within the time frame, or they ended up getting another car or something like that, and these loans tend to turn into another kind of loan with a different or a higher rate. Now, it's important for me to express that many people walk into a dealership focused only on the monthly payment. While the monthly payment matters, it is only one piece of the financial picture. The length of the loan, the interest rate, the resale value of the vehicle, and how long you plan to keep the car all play major roles in determining the true cost. Also keep in mind that you have to add the gap insurance. Therefore, I wanted to talk to you about these loan calculator tools that are going to help you really understand the budget and the budget that you can pay without going under financial stress, and what compounds that, what are the parts of that loan. So some of these calculator tools are Bankrate, Edmunds, and AutoGravity. And again, using these online calculators can help you illustrate exactly how much interest you will pay on various long terms, enable smarting financial decisions. Let's talk about leasing a vehicle. Leasing a vehicle works very differently from financing. Instead of buying a car, you are essentially renting it for a fixed period of time, usually 2 or 3 years. Monthly payments are lower because you are only paying for the portion of the car's value that you use during this lease period. Leasing appeals to people who want lower payments, newer vehicle, and access to the latest and safety features and technology. Also for people that don't have a good credit history and might incur in a higher interest rate on a car loan. Leasing can also reduce repair risk because the vehicle is typically under guarantee for the entire lease term. This means fewer unexpected maintenance expenses compared to owning an older vehicle. However, leasing has important limitations. There are strict mileage limits, usually between 10 or 15,000 miles per year, and for example, in this case, exceeding these limits results in costly penalties, and there are also fees for excessive wear and tear. Most importantly, when the lease ends, you do not own the car. All payments made through the lease are gone, and you must either return the car or start with a new lease. Over a lifetime of leasing, a person may always have a car payment and never own a vehicle outright. Now, I have mentioned the advantages and disadvantages of leasing a car. Let's talk about the electrical vehicle incentives and the tax credit. So, electrical vehicles represent one of the most interesting developments in the last year market. Government incentives have made these cars more financially competitive with traditional gasoline vehicles. Federal tax credits can be as high as $7,500 for qualifying vehicles. Some states offer additional rebates, tax incentives, and support for home charging equipment. These incentives can significantly reduce the effective purchase price of an electric vehicle, and for some buyers, this makes this kind of car cheaper and comparable to a gas-powered car. However, buyers must carefully research eligibility. Not all vehicles qualify, and income limits may apply. Additionally, charging infrastructure and a driving range should be considered based on personal driving habits, right? As well as where you live and the distance, from where you charge your car to your work and the amount of times that you drive. Usually, the persons that I have seen that have this car obviously have to live in the city, in a city that is very friendly with electrical vehicles, safe for them as well. So those are things to keep in mind. So here, these are some of the tools if you want to do some research about the incentives for this kind of car. So we have Plugstar, researchable database of available incentives by location and vehicle model. We also have the Department of Energy Alternative Fuels Data Center provides comprehensive information on federal and state incentives, and then the manufacturer sites. So many electrical vehicle manufacturers offer built-in tools to calculate available incentives for their specific models. Now we're going to talk about the usual traditional used car market trends. So now I put this opportunity or trapped. Okay, so the used car market has stabilized compared to the extreme volatility seen during the last pandemic years. However, prices remain higher than historical norms. Used vehicles can still offer value, especially for buyers who do not need the newest features. Certified pre-owned vehicles are often a good compromise because they come with guarantees and inspections while costing less than newer models. So I think we all have heard about how the cars depreciate a bit as soon as they are out of the dealership, right? So that's why some people are willing to buy used car, like maybe second owner of a car that is not too old. And I guess this will depend on your taste, your needs, your family size, where you live. And I will personally say how much you know about mechanic in cars, because if someone is very knowledgeable on this aspect, maybe they will appreciate an older car. I personally, I don't know anything, so I would rather to buy a newer car, like maybe as a used car that is not too old. That way I know it's not going to give me too much trouble, I hope. Now, this is why research is critical in the used market, because buyers should consult pricing guides such as Kelly Blue Book and Edmunds, and obviously review the vehicle's history report using services like Carfax. It doesn't mean that because I I am hoping that the person that is selling it to me is being honest and took care of the car. Doesn't mean that I'm not going to do my research in order to educate myself and be able to know what I'm looking for this kind of purchase that I'm going to do. Because a well-researched used car purchase can significantly reduce total ownership costs compared to buying a new one. So here are some of the tools I mentioned. Some of them, of course, are very popular. Now, sometimes it's better to wait, right? Um, so here I just wanted to talk about, um, if I put this sentence here, holding out might pay off. So in some situations, the best financial decision is to wait. If your current vehicle is reliable and paid off, delaying a purchase can really preserve the cash flow. Waiting allows time for interest rates and hope to potentially decline, and inventory to increase, as well as technology to improve, right? The good thing about cars is that every year there is a newer model with newer things that makes them more competitive and efficient. It also allows time for you to save for larger down payment, which reduces the borrowing costs. So waiting is not always convenient, but financially it can be powerful when the conditions are unfavorable. So some of the cases I have seen, especially in my case, I am overseas and work in an American bank. I have seen cases where the loans that we have to do overseas are a little different, right? And therefore, sometimes the interest rate is higher because this kind of deal has to be a different deal. In overseas, we don't use pre-approval loans. We don't use open checks. We have to set a done deal because the borrower, they need to know, definitely they need to have the car as a collateral, and before the loan is submitted, we have to do our research of the car with local companies and see how much is that car worth, and also we have to calculate the exchange rate. So in a nutshell, if the car is not really worth it for the lender to acquire the debt and lend the money, if the lender doesn't think that it is worth for them to collect this car in case of a lack of payment, they will most likely decline the loan. Of course, there are so many variables. Of course, like the client's credit history, credit score matters, their status with the lender, the financial institutions, that matters. But it's very important to see the kind of car and see if they're really getting a fair price for this car. So overseas, it is handled a little different, and I guess most of the people here have been able to experience that as it is fundamental so many times. But I just wanted to bring this up because, back in the States is, we pretty much everybody knows, but overseas the situation is a little different. Sometimes people want to buy a car and they want to bring it back to the States, right? So there are so many factors that the lender has to consider in order to approve this done deal. Sometimes, for example, there are persons that say, hey, I requested this loan for this specific car, but at the end, after they have been approved as after they have signed the promissory note and the loan is about to be disbursed, right, with a check. Sometimes, well, most of the times that check has to be given to the client and has to be deposited into their account so they can withdraw it and go and exchange it to the local currency so they can go and pay the dealership, right? All these extra steps. Um, so sometimes these persons are like, oh, hey, I mean, it's not very common, but I have heard a case where they are like, hey, I changed my mind. I don't want the card I said I was going to get. Can I buy another one? And that's a no, right? Like, if you already apply for this, then you will have to cancel that loan and resubmit the loan. So of course, that's going to be another hard pull on your credit and, well, extra steps and extra work. So here I just wanted to create a comparison, between leasing, financing, and waiting. So here are the conclusions. Leasing includes lower monthly payments, new car every 2-3 years, warranty coverage throughout lease, no long-term commitment, no ownership equity. Now, as for the military families, I haven't really experienced this myself, and I will encourage you to do some research. But sometimes, the orders and the kind of orders that you have might help you get out of the lease, or pause it if service member is going for deployment. But again, as I mentioned in the beginning, this is no financial advice. So the purpose of this is just to educate and share some of the information, but please do your own research. Okay, also coming back to the slide, now what are the most important things about financing a car is like, you have to keep in mind that you will have higher monthly payments than with a lease, but you will also build equity in the vehicle. There are no mileage restrictions, and then you have the freedom to modify your vehicle. And eventually, you will be payment free, and then you will own your car. Lastly, waiting. You don't need an immediate financial commitment. You also will have the potential for a better market conditions. You will have time to save for larger down payments, and then this can be obviously one of your smart financial goals. You will also have the opportunity for interest rates to decrease, and technology improvements in newer models. So this is just a quick fun fact here. Now I just wanted to show you this. So ultimately, deciding between leasing, financial, or waiting comes down to your personal situation. If you prefer driving newer cars every few years, leasing could be your best option. Financing makes sense to those looking to own their vehicle outright. And if neither option feels affordable right now, holding off until market conditions improve is sensible. So please look at this graphic that I have here, and then of course, we have to keep in mind the current market decisions and then your driving habits, right? How much do you drive? If you drive a lot and you have to commute, or your job is like the kind of job that you have to drive all around, maybe having a car that limits you on the mileage is not the best option. Also keep in mind your financial goals. Do you rather to just kind of put the money on towards the lease and then just kind of, maybe I will rephrase that, maybe just allocating these funds and then don't have the tangible item at the end, like you will see that you're just literally renting a car, but once you don't, maybe you cannot do the same payment, or once you have already paid multiple times and you have a decent amount that you have contributed towards your lease, you are not going to have any tangibles at the end, right? So keep that in mind. And then your decision. Of course, everything comes to your decision, and these are just like the underlying main factors that you have to keep in mind. But at the end, this is up to you. So, as a conclusion, buying a car requires careful thought rather than impulse. Leasing offers flexibility and lower payments but no ownership. Financing offers ownership but at a higher cost, and waiting offers time and leverage. Of course, you have to be a little uncomfortable in the meantime, but then if you are wise and organized with your smart goal of buying a car, as it says, yeah, it is going to offer you a better benefit. Now, the best choice is the one that supports your long-term financial stability rather than the short-term convenience. So I hope you guys enjoyed this video. Thank you for joining me, and we will see you the next time. Bye bye.